Welcome to the Daily Update Podcast, where we'll go over the action in the market for Monday, October 13th, and then see how things look for Tuesday, October 14th. Recapping what happened in Monday's session. The S&P 500 had a strong day, recovering approximately half of Friday's losses. The index closed at the 6650 level, up 1.56% for the day. This followed a robust start, with the S&P Futures opening 1.25% to 1.5% higher Sunday evening. This helped set the stage for the gap up open at the daily pivot of 6622. Throughout the session, prices fluctuated around the 6650 mark, finding support at the daily pivot and encountering a resistance at the 20-day simple moving average. Volume, however, was average to below average, suggesting limited conviction among buy-the-dip traders. Despite the day's gains, the S&P 500 remained short-term negative as it closed near the 20-period exponential moving average, but below the 20-period simple moving average, which continues to act as resistance. Looking at the technicals, the S&P 500's break below the 20-period moving averages on Friday confirmed a negative short-term trend, and Monday's action saw these levels tested as resistance. However, the intermediate and long-term trends remain positive, supported by the 50-period moving averages and pivot points across the S&P and major indexes. Volatility indicators provide a mixed picture. The VIX, which is the fear gauge, dropped back below 20 to 19.03, signaling a reduction in fear among investors. Other volatility metrics, such as the VIX of the VIX, suggest lingering caution. Market sentiment also improved slightly, moving from 29 to 33, but still remains negative. Momentum indicators, including the McClellan Oscillator, Bullish Percent Index, the MACD, and PMO, are still negative in the short term, though showing some signs of improvement without a full reversal to positive. So what drove the market in Monday's session? Growth sectors, including tech, semiconductors, small caps, and mid caps, outperformed. Defensive sectors, including staples, lagged behind, reflecting a risk-on sentiment. Two technical signals are worth noting. The Hindenburg Omen, a bearish indicator, triggered an initial signal, but it remains unconfirmed until another spike occurs by November 7th. On the bullish side, a potential Zwag NYSE breadth thrust could signal strength, but it requires a surge by October 24th to be confirmed. These unconfirmed signals add a layer of uncertainty to the market's near-term direction. External factors had a limited role in Monday's session. Geopolitical developments, including the return of hostages in Israel, and comments on U.S.-China trade tensions, did have positive impacts for the market, but it was still minimal. Remarks from President Trump and optimism from Treasury Secretary Bessent helped ease some fears of escalating trade wars. The bond market was closed for Columbus Day, leaving interest rates unchanged at 4.05%. However, the dollar's ongoing uptrend could pressure equities if this persists. Looking ahead, the continuing government shutdown and upcoming earnings reports from major banks such as Goldman Sachs, JP Morgan, and Citigroup on Tuesday will be critical. Additionally, Fed Chair Powell will give a speech on Tuesday, which could draw significant attention. Looking ahead to Tuesday, October 14th, the short-term outlook remains negative until the S&P 500 closes back above the 20-period moving averages. However, intermediate and long-term trends are positive, supported by the 50-period moving averages. Seasonally, mid-October tends to have a positive bias, but the second half of the month historically underperforms, yet still is positive. Key economic reports such as CPI, PPI, and retail sales are uncertain due to the government shutdown. Areas to keep an eye on would be 6,700 to the upside for the S&P and support at 6,600. Earnings reports released from the banks and Fed Chair Powell's comments are likely to set the tone for the day's trading. In conclusion, the S&P 500 is navigating a delicate balance. Short-term weakness persists, but longer-term trends remain robust. Unconfirmed technical signals such as the Hindenburg Omen and Zwag NYSE breadth thrust, combined with external factors such as earnings and geopolitical developments, will help shape the market's near-term path. It's best to stay vigilant and keep an eye on key levels. Thank you very much, and I will talk to you in the next podcast.